Good morning, investors and traders, and welcome to our channel. And more importantly, happy Friday to you. I hope all is well in this particular channel, or in this particular video, if I can get the words right. What we are really going to do is we're going to spot and look out for some important opportunities in the following asset classes. Number one, we will look at the equity market, and then we will see what are the reasons for the current upward or downward movement in those equity markets. Number two, we will look at the forex market, and some will discuss some of the major forex pairs such as euro dollar, sterling dollar, and then see what is really driving the move for those ones. Number three, we will discuss commodities for those particular asset classes. And when we go into commodities, we will discuss such as gold and oil, and then see what is really driving the moves over there. Where are the entry and exit levels within those particular asset classes, especially in WTI and gold. And finally, and more importantly, we will touch cryptos, because obviously there has been a lot going on in the crypto market, and then I wanted to discuss that with you guys. In addition to that, I've also put out a technical analysis video where you can actually have the opportunity to see the charts by yourself and then look at the opportunities, what I have talked about it. Now, if you haven't subscribed to our channel, please hit that subscribe button, because not only it helps us on a YouTube channel, but it will help you to give you the notifications the moment that the videos are uploaded, number one. And number two, in these live chats, it will give you the opportunity to come over here and ask questions, because right now in this live session, you have the opportunity to ask me a question. Now, a little bit about myself. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, in equity trading with Bank of America. Currently, I work as a chief market analyst for Evertrade. Now, let's turn our focus into equity markets. So the question number one is why equity markets are moving to the downside. Well, there are a number of reasons for that. Number one is because yesterday, that upward momentum, all of that, Biden coming into the office and all of that, that kind of faded away. Investors have started to look at the numbers. When the numbers came out, the economic numbers came out yesterday in the US, it was pretty much clear that we still have a lot of weakness. We have a lot of things to sort out. And the second biggest challenge that we are seeing in the market is, and again, the market keeps coming back to these particular challenges, is that with respect to coronavirus vaccine, we do not have a sufficient supply. It is going to take a hell lot of time in relation to get people vaccinated. And the thing is, the longer it will take for governments to vaccinate people, that means the longer the path of recovery. However, on the positive side, what we do have, we know that Biden is talking about 1.9 trillion stimulus package. Now, what does that mean in plain English? That means that governments are going to provide, the US government is going to continue to provide more support for the equity market. And we know for sure that this particular equity market loves that support, and that will continue to drive that upward trend. So if you look at not the day-to-day price action, but if you look at it from the position size, the long-term trend will very much remain in place, and that will continue to push the Dow Jones, which is your DJ30, to the upside. It will continue to push the S&P 500 index upside, and of course the Nasdaq 100 as well. So the current retracement is really an opportunity for you to push to get back into the market if you haven't been able to get in. Because remember, in all of the videos, I've always talked about that, right now I do not have any direct exposure in equities. And the reason for that is because I have been waiting for retracement. I know the market is due for retracement, and that means the pullback, the sell-off. And I want the Dow Jones, the DJ30, the S&P 500 to retrace at least 5%. If I do not get that 5% move, I may look for another opportunity. But right now, I'm not convinced, because markets are too expensive. In addition to that, When you look at the RSI for the Dow Jones, the DJ30, the S&P 500, what you see is that the RSI is still very much touching the levels which are classified as oversold. What is overbought? What is overbought? On the RSI, the level of 70 is an overbought, meaning prices are likely to move to the downside. And the same is happening with the European indices as well. Look at the DAX, which is the German index. It is showing a lot of weakness. The FTSE 100, the UK stock index, is also showing weakness as well. So if that theme is coming in, the strongest index out of all of them is, of course, the NASDAQ, because that is your tech index, and that will continue to boom. So the retracement may not happen that much unless we start hearing the thoughts or we start hearing these notions in the market, which will say that, yes, now regulations are going to go hard on bigger companies. That will trigger a big sell-off in the NASDAQ, because bigger companies like Facebook, Apple, and Amazon, they will start getting a lot of hate. So that could be another opportunity again for us to get back into those stocks, because right now they're too expensive to. So with respect to the Dow Jones Index, the best trade was that what we mentioned yesterday. The resistance of 31,175 has worked enormously well, and that is pushing the markets higher. I'm still waiting for the prices to continue their journey towards a 50-day simple moving average. If that will happen, that will make things even more attractive for me, and then I'll probably will start looking to add something into my portfolio. Now, with respect to the euro dollar, the big trade is really on the back of the ECB, the European Central Bank. The meeting happened yesterday. We talked about nothing was expected from the European Central Bank. That's what pretty much happened as of yesterday as well. And now we are seeing that boom. We are seeing that momentum to the upside. Just coming up, breaking news, which is German government cuts 2021 GDP growth forecast to 3% from 4.4%. Again, a very negative news, and that is going to have an impact on the DAX index. And as I can see, the DAX index, as this news is coming, as it just came out, the DAX index has started to move. Now, of course, this is the live session, so I wasn't able to really tweet that. But usually, news like that will be straight on my Twitter account, and that means that will be straight onto your platform as well, on just like notifications on your phone, and then it'll give you the opportunity to better understand why the move has happened in those particular cases. So now going back to the euro dollar, because of the ECB said that, okay, look, we are not going to do anything major for the time being. So for that reason, the euro dollar has continued its journey to the upside. Now we have moved above the 50-day simple moving average on the daily time frame, and currently trading at 1.2175. I believe this momentum can continue to push the prices to the upside. We can go towards 1.2195, and the resistance is at 1.2222. So that is the price level that you're going to be really looking at. Now, in terms of sterling, of course, we are seeing weakness. There is no doubt about that. And the weakness in sterling that we're seeing, the reason, first of all, the reason is Boris Johnson, if I can get the name in my head correctly. So Boris Johnson, so he has downplayed the expectations of economy, of reopening the economy anytime soon. We are still lagging that vaccination, getting people, 15 million people by 15th of February. We're still lagging that number. And because we are not on target, and that means that the lockdowns will continue to remain in place. In fact, the news has just actually came out earlier. We said that, the lockdown can actually be extended all the way to summer. Earlier expectations were that, from Easter, things will start getting back on track. And I do believe things will start getting back in track, and we will probably go into a, tier 1 or tier 2. So much, very, very low tiers. But the economic growth will start coming back quite massively after Easter. I believe that if there's no other lockdown, we should see a massive rebound in growth. But currently, of course, all of these negative news is really pushing the sterling lower. lower. The overall long-term trend is certainly very, very positive, still very much strong. We are very much obeying the 50-day simple moving average, and the momentum from when the prices were trading at 1.29, when it touched that, for the first time on the 50-day simple moving average, continued to push it higher. Then in December, we had another touch of a 50-day simple moving average. Now we're still moving to the upside. Again, very positive. Overall trend is positive for that. Now, in terms of oil prices in commodities, as we've discussed in one of our technical analysis video, we talked about the opportunity to go long when the prices were trading in around, I think near 50s or below 50s. We talked about the opportunity, and the prices did go more to our resistance level. Now, the prices have reversed those ones, and on the 4-hour time frame, what I'm seeing is the price dropped below the 50-day moving average, giving me indication that, look, because of the lockdowns, investors and traders believe that perhaps this is going to have a profound impact on crude oil supply and on demand, and that is really pushing the prices lower to the downside. But in terms of an opportunity to get back into it, to keep the price level under your watch, it is really between 51.50 to 50. I think especially if the current price levels they do not hold, where we are currently in a support zone, in a buy zone, which is between 51.97 to 51.870, let's just say. But if it doesn't hold, then we are really moving towards a $51 price level, and keep an eye on that. But if we fail that, then keep an eye on 49.25, because these are the price levels that perhaps you wanted to look at. And always remember to smash that like button if you like what I'm talking about, because this will give you an opportunity to come back here, ask me as many questions as you can right on the side on this live chat. This is your opportunity to ask me questions if I'm missing something, if you want me to talk about something else. So now finally looking at gold prices are challenging, moving to the downside once again, and now really challenging the 50-day simple moving average. If we break below the 50-day simple moving average on the daily time frame, this upward momentum is over. So keep an eye on 1849 price level, because that is where the 50-day simple moving average is on the 4-hour time frame. If the moment that we break it, we stay below it, we are going towards the early 18 price level from there onwards. Now, cryptos, Bitcoin, very, very important. We've discussed about the weakness in Bitcoin in our earlier classes, in our earlier webinar videos. Now, nothing is abnormal with respect to Bitcoin, which is really happening. This correction is very, very healthy. We have to keep one thing in mind. That is, every single time the rally comes to Bitcoin, the price doubles. So recently, the all-time high was 20,000. The new all-time high is 40,000. So price doubles. So if the current bull momentum has died off completely, this bull rally has finished, and the prices are going to consolidate between 25,000 to 30,000 price level, or between 20,000 to 30,000 price level, the next rally is going to be towards 80,000 price level. It's a double of that momentum. However, if prices consolidate between 25,000 to 30,000 price level, the next rally will be for 50,000. That means that the rally is not finished. It is only correction, and we will continue to move towards the 50,000 price level. In terms of fundamentals, two things to watch out. Number one, the stance from the Treasury Secretary, Janet Yellen. Secondly, the SEC, the new person in charge, Gary Gensler, what he's going to talk about it. Do not expect anything positive from these guys for sure. They're going to create as much negative environment as they can. Something that we got to keep an eye on is if they are going to stop institutions from getting involved in the crypto market. Because if they do stop these institutions, then we could see some serious damage. If they don't, and then carry on talking about it, that will be only an opportunity for you guys to get involved in this market. and then the market will continue to move higher from there onwards. All right, a lot of talks over here. Go back, give a thumbs up if you like it. If you don't like it, tell me then next time what should we be really adding into it. More importantly, let me know if there's a software that you know on YouTube Studio that I can use to share my screen, because I do have a Bloomberg Professional platform, and it will be really good to share the screen with you guys and then give you some really good nuggets. All right, that's all for now. Have a lovely weekend, and thank you for tuning in. I appreciate your time.